Hello, I'm Jason Bates, owner of Electrum Financial, where your mortgage is not just a flip of the coin. If you need to refinance or need a purchase and you need a mortgage, I'd love to be your lender of choice right here in the state of Arizona. Don't forget to subscribe to the channel if you're watching this on YouTube. If you're watching this on Roku or on Amazon Fire, please give that review to the channel, as that would help me immensely, and I certainly would appreciate that. Hey, this week, a lot of stuff is happening, or I should say a big announcement by the head of FHFA, Federal Housing and Finance Authority, Mark Calabria. So let's dive right into it. So the big announcement this week, head of FHFA, Mark Calabria, makes an announcement on refinances. They could get more expensive for sure. The FHFA, Fannie Freddie's regulator, is implementing a new price adjustment for all refinance transactions of 0.5%. Now, it's not 0.5% in rate, it's 0.5% in rebate on the loan. So that doesn't equate to rates. So don't panic, don't throw tomatoes at the TV of the loan, i.e. $1,500 on a $300,000 loan. This applies to loans delivered to Fannie and Freddie in September and thereafter, which is almost all of them that aren't already underway. Why are they doing this? Why are they doing this? They are saying it's due to economic and market uncertainty. Some might find it hard to swallow because this fee didn't exist last week or last month, but economic and market uncertainty certainly did exist. So a little bit of bullshit, excuse my French, but a little bit of bull on the reason for it. But we're going to get into why I really think they are doing it. And it goes back a couple months ago. But let's continue on here with this. Oh, little too far in there. So who's going to complain? Ultimately, homeowners. The mortgage community is going to get things started, though. Reason being, lenders have tons of loans that are already blocked with expiration dates after September 1st. They're going to have to eat the 50 basis points on all loans. For big lenders, this is tens of millions of dollars that instantly vaporized profits. Does this affect purchases? No, you're in luck. Not affecting purchases, just refinances. Is there anything I can do to avoid this, to make it better? No. We're the government. They are here to help. So a little humor there on that one. But let me bring up here why I think Mark Calabria is starting to do this, because this is important. And timing is everything on these things. So the renewed push to privatize Freddie and Fannie, what mortgage borrowers could expect. So let me zoom in here a little bit on this article so you can see it. I just highlighted a few things here. Together, the enhancements of the re-proposal ensure each enterprise safely and soundness and its ability to fulfill its statutory mission across the economic cycle, in particular during periods of financial stress, Calabria said in a statement. So basically, he's trying to shore up Fannie and Freddie that in the event we were to have an economic downturn like 2008, we didn't want to turn to the taxpayers for bailout money. That's basically his argument here on that. So the privatization would compel Fannie and Freddie to raise roughly $240 billion in order to achieve an equal footing with other financial institutions. At the same time, however, unlike most mortgage lenders, the enterprise holds a single asset, the mortgages they purchase from lenders and securitized for investors. In the event Freddie and Fannie, I always get that backwards, exit federal oversight, their focus on a singular financial product could expose them to heightened risk. They have two levers to control their risk, either by increasing pricing or by tightening their underwriting. The result would be, economists seem to agree, higher loan fees and higher interest rates, at least by 0.25%. So this basically, Mark Calabria is saying, hey, look, we got limited here on Fannie and Freddie. We got one product. That's mortgages. And we buy those from mortgage brokers, mortgage lenders, banks. We securitize them and then put them and sell them on the secondary market, put them in 401ks, things like that. And if Fannie and Freddie, if we were to see an economic downturn, that would then jeopardize people's 401ks or the retirements. And so I applaud him for looking for ways to help, protect that. But I think the way in which he's going about it, I think is a bit, I don't agree with it here. And we'll get into the arguments here on both sides. You've heard one side, but we'll talk about the other side here in just a second here too. So the Great Recession led to tightening of credit score requirements of private Fannie and Freddie would have to reduce their risk. They could demand from lenders even higher credit score stipulations for mortgages they secure. This would further increase the price of loans for someone with less than absolute pristine credit. There are suggestions that Fannie and Freddie Mac wouldn't be able to secure cash-out refinance loans or loans to landlords or loans to second home owners. Another possibility is that the enterprises would lower their conforming loan limits or loan amounts. Freddie Mac and Fannie Mae guarantee, says Lewis. Basically, that would mean the average loan size would be less, and so there would be more focus on affordable lending. So I want to talk about that a little bit, because if Fannie Mae and Freddie Mac were to go private here, I think we got to think about this for a second, because we're in the middle of a pandemic, and if Fannie Mae and Freddie Mac were private, let's take Chase as an example here. Chase, a publicly traded company, what have they done? They have, as soon as the pandemic came out, they raised their credit score requirement to 720. Imagine if Freddie Mac and Fannie Mae did the same thing. There would be no refinances going on right now. And if private, there is a responsibility of the stockholders and shareholders or board members to protect the stockholders and shareholders. And one way to do that is to lower risks. And how do you do that? Well, you deal with people who have pristine credit, or you lower the loan amount so you're not exposed in one loan by so much. And so this is the argument that they're making here on the privatization of Fannie Mae and Freddie Mac. And I don't necessarily disagree with this argument at all. So I understand what Mark is trying to do, and I get that. There are two sides of this coin. He's trying to protect 401ks, things like that. We don't want tax bailout and things like that, or ask the taxpayers for bailout for Fannie Mae and Freddie Mac, as they did get a lot of scrutiny last time about how mismanaged they were. And so he's trying to do the right thing. I just don't know that doing this right now is the right thing to do. Now, I will say, in all fairness to him, if there ever was a time to implement this, now would be the time. Interest rates are at historic lows. Historic lows. I mean, when you're getting a loan in the 2s on a 30-year fixed, and even possibly in the 1s on a 15-year fixed, you really can't complain with that at all. So if there ever was a time to raise capital, now would be the time. In addition to that, the demand is so high for mortgages, so his timing is actually pretty good as far as that. We wouldn't want him doing this when interest rates are at 4 or 5%, right? We want him doing them when they're a lot lower. So let's finish up the article here. FHFA Director Mark Calabria contends that privatizing Freddie Mac and Fannie Mae would provide them with the capital bandwidth to help all Americans in times of stress. Zandy disagrees, saying if we go down the privatization route, we have to think very carefully and clearly about what roles Fannie Mae and Freddie Mac will have to play if we get into another crisis. If we don't, in the next crisis, it's going to be a mess, because Fannie and Freddie as institutions just aren't going to play by the same role as they do today unless they're required to do so. So this is, I'm kind of in Zandy's court here. I don't know. I'm sure if things, privatization, I'm sure the government could step in and demand certain things of Fannie and Freddie, but then that's going to ruin the integrity of Fannie and Freddie, which stockholders and shareholders, they've got to answer to in that situation. So right now, the conservatorship of Fannie and Freddie, I think, is the right path right now. I don't know that we need to privatize Fannie Mae and Freddie Mac. I think that the timing is just a little bit off during this pandemic, although I see the reasons why. So with that, that's what's causing a lot of uproar in the mortgage market. So I'll end it with this week's